Hello and welcome to Ecoholics. In this small video, we will discuss how to read an editorial and what are the main points that we can take out from a particular editorial. So a lot of students requested me to make a video where we can think about like how to read the particular article in the newspaper and what are the important points we can take and make notes and use that in our examination, like answer writing or maybe objective type or giving interview, etc. So here we have taken this editorial, a lead editorial of 31st August 2021, the Hindu newspaper. So you can see that, you can download the e-paper as well. Now this very important article regarding the monetization move. You know that regarding public asset, that's a currently in news, national monetization pipeline. So first of all, you have to see what are the important articles for our syllabus. So if you are seeing the syllabus, if it is connecting with the syllabus, then it is important, otherwise leave it. So now we have seen that infrastructure, public asset is a part of our syllabus, UPSC syllabus, maybe Indian Economic Survey, Civil Services or RBI exam, anything. So this is very important, debatable topic. The person has written this article. Now we see one by one what are the important points that we have to take. So if you read the first paragraph, majorly you will find the introduction that is trying to build a certain story. So these editorials are written in the form of essay that you are supposed to write in English paper or UPSC papers. But whenever we are writing answers, we have to be very crisp because we'll be getting only 100 words, 200 words or at max 300 words. So we have to see in the first paragraph, it's like very easy language. They are trying to introduce the topic. So let's see what is that. So the government has launched this policy to sell the public assets, or more precisely their revenue streams, over the next 4 years. So in the first few lines, it is clear that what is the main agenda, why we are debating this. So do not write anything. The pipeline mostly includes railway stations, freight corridors, airports, renovated national highway segments, etc., etc., amounted to 6 lakh crore or 3% of the GDP. Now you can see this is how we write. Whenever we're writing answers, we just give the introduction. So it's not repeating the same sentence. So in the UPSC as well, what happened? There's a question. No need to repeat the question in the answer. What you have to read or what you have to like present in the examination, that you are able to understand what is the question. So the question is regarding the national monetization pipeline, and here is the brief introduction, including, you can say, the data as well. So that's a perfect introduction you can start for any question in the UPSC exam. Now let's move. As outlined in the union budget, NMP aims to mobilize resources for the financing infrastructure. So this is a definition. So those who are reading for the first time, like what's the meaning of this? So they are telling that this is what we do. The aim is mobilizing resources and financing methods for infrastructure. Now here you see the other two methods are raising resources like for setting up development finance institution and raising the share of infrastructure investment in the central and state budgets. Why? Because today we create infrastructure, tomorrow we will reap it. So it's kind of a capital investment. If you have read Heck-Sherolin theory, or if you have read the growth and development theory, where we can say unbalanced growth, Hirschman and other, they have given a lot of importance to the infrastructural development. Now if you just scroll it down, and I'll see what it is written there. So here you can say the hard question. So now you come on to the topic. So the proposed asset sale monetization raised many questions. Now what he has done? First, he gave the introduction, like this is the context. Now, what's the problem is? So he's addressing the problem. Conceptually, how it is different from disinvestment and privatization practiced in the last 3 decades. Because you have seen in the last few budgets, government was allocating certain targets for disinvestment. So here we'll see, they have like both disinvestment and privatization target. They have missed seriously the targets almost every year. How believable these targets are. It means in the past, the performance was not satisfactory. The performance was like the target was different and we were not able to achieve that target. So how can we believe this? So how are they likely to perform differently this time? Because this pipeline as a desperate attempt to shore up public infrastructure or public finances after nearly 2 years of dismal output growth because of COVID, stagnant tax to GDP ratio. Tax to GDP means the amount of tax we are collecting in terms of our GDP. So that is currently India's, I can say 17%, which is quite low. In the Western countries like Denmark, it's as high as 45%. So stagnant tax to GDP ratio despite steep rise in the taxes on petroleum products. Now you know that petrol prices are going up, and this because of the back of excise duty. Government is saying that we need to fund this COVID related crisis. That's why they are continuously increasing. Another argument they've given that in order to promote greener economy, e-vehicle, government is doing this. So if such distress, this is called sale desirable to obtain a fair value for public asset. Like for example, it's simple. If you are selling something and the other person who is buying your product or anything, if that person knows that you are in desperation to sell, obviously you will not get that much of value. So what we do, we take time. We take time that we are not able to address simple scenario. In that simple scenario, what will happen? Suppose for example, I want to sell something, I want to sell in the second-hand market, and the buyer knows that I have to sell, I can't do anything, so I'll not get the fair value. The same lines it is happening, because if government is saying that we are selling infrastructure, we are monetizing it, so we'll not got fair value. The same is the case with the Air India as well. So this kind of thing. So next line is, would the market not facilitated the dire state of the economy, beating down the prices as any distress sale. So distress sale is simple. The NMP differentiates assets monetization from asset sale by saying asset monetization. So the definition they have given is different. Asset sale is different and asset monetization is different. So let's see. So here you can say the definition they have given. What's the definition? Definition simple. The entails a limited period license lease of an asset. So it's not like permanent thing, but here what you have to do is limitedly they are telling. That is owned by the government or public authority to private sector entity or upfront or periodic consideration. So this is given in the volume 1. So it's not like that we will sell. It's just simply that we are giving on a lease, okay, for a temporary period. So license or lease of an asset owned by government. So government यहाँ बेच नहीं रहा है, जो rumor चल रहे हैं public में कि पूरा public infrastructure they are selling. So it's not like that. You can see, I read from the volume 1. So asset monetization as defined above is the same as the net present value. You know, whenever we are evaluating anything, NPV is a very important indicator. So NPV of the future stream of revenue with an implicit interest rate, because suppose we are calculating this in 2021 for 2035, so we have to take care of other areas as well, like interest rate, inflation, etc. So in a footnote it is mentioned that NMP document further clarifies sale, that is transfer of legal ownership of asset, is only envisaged in the case such as disinvestment or a stake sale. Again, there seems to be conceptual confusion. Sale of minority equity does not lead to a change in the managerial control. Like, it's a very simple basic concept. If you own 51% of any entity, it means you are the owner. You can take decisions. But if you sell minority shares, it means among that 49% you can sell anything. That will not impact the ownership. Okay. So this is the main argument. So it is clear that it is not the sale of the public assets. It's just simply they are giving on lease. Okay. Now here, this is how you have to see historical missteps. So the NMP outlines mainly two modes of implementation of monetization. First is PPP, public-private partnership, and second is structured financing to tap the stock market. You know that Indian economy is going down, but the stock market is going up. So this like a different scenario. So here you can say either they are using PPP, it means government and public, government and private collaboration, and the second is raising money from stock market. So the PPP infrastructure has been financial disaster in India, you know, that's why HAM and EPC other models have introduced. So evident from the economic boom of 2003-2008. So India did create world-class airports in Mumbai and Delhi, speeded up highway and this at that time. But financial disaster, we can say, is just not in the model, but in the implementation of that. So however, after 2008 financial crisis, the world economy and the trade plummeted and India's GDP growth rate slowed down. So you can see the crisis started in 2008, but the impact on India came later. It's approximately till 2009, 10, 11, India impacted. So that hurt the demand, it means the revenues, and many PPP projects failed to repay bank loans. And you know, the problem of NPA started at that time. So banks were left holding the NPAs. So further, as the bulk of lending was to politically connected corporate houses, firms, etc., etc. So you can see that India is still recovering from that. Okay, so the legacy and that the period without any easy and credible solution in sight. So NPA is still a problem. Again, if we are entering into this kind of a scheme, it will create another kind of risk that India can face. So here in the same lines, you can see an infrastructure investment trust is being mooted as an alternative means of raising finance from the stock market. You must have heard about this, mentioned in the previous budget talks as well, infrastructure investment trust. So they'll make a trust, from that they will finance these projects. So in principle, this infrastructure investment trust is much like mutual fund. That's what I said, that it will create a fund whose performance likely linked to the stock prices. So stock prices will go up, go down, depends on the contribution. And it may be worthwhile to jog one's memory to recall how this investment process began in 1991 after the initiation of economic reforms. So I hope you understand till this point. The article looks in a streamline, like first introduction, then you think about that, the question raised. So now the author is answering those questions. So on the same lines, if you are writing answer, the question is asked, you just give introduction. After giving the introduction, you just try to raise the concern raised in the question. Then you try to answer that with the proper evidences. So you have seen that there are certain data, certain examples of global financial crisis, NPAs, etc. This is how the author is supporting. So in answer writing, you have to use these words from these articles to support your argument. Now apart from that, if you go up, okay, so if you realize that it is worthwhile, like we have done, so it was by offloading bundles of shares of public sector enterprise to the financial institutions like UTI. You must have heard about UTI, Unit Trust of India, which in turn sold the bundles of booming secondary stock market to realize the best price. So you know that if you will interfere in market functioning, it will not give the proper value, the fair value. So what is important right now is to get the fair value of these public assets so that it can generate the capital. So the euphoria was short-lived, however, as the market crashed in the wake of Harshad Mehta scam, stalling and discrediting the disinvestment process for almost the entire decade. So you understand that you have to take the risk, but that risk should be covered. So here this time they are creating a trust, so it may help this time. Okay, so it may be worth learning the lessons from the historical missteps before getting the idea all over again. The current stock market boom, as many have apprehended, the currently high stock prices seems like bubble with heightened uncertainties in the global financial market. So what the author is saying? Author is saying it is very simple, that the people really are investing in the bubble. That's what author is saying. So in the stock market, that bubble is creating. If it is growing, you know that people are putting money into that. Now we are seeing that economy is going down. So the stock market can anytime crash. So that is what the author is warning. With the US Federal Committee to reducing its asset prices program known as quantitative easing, you must have heard about QE. And that is what we call hot money. It means as soon as Fed will take that action, money will flow from India to back to US, because that FII is coming in right now. That's why stock market is going up. But as soon as they will withdraw, the hot money influence fueled by the stock market prices may dry up, throwing up nasty surprise for the stock market. So this is what the author is warning. So he's given the data. 2021, the economy contracted by 8% due to the pandemic. So let's see. And the lockdown. And the lockdown as in the annual report of Reserve Bank of India. So the current year is the best likely to regain the pre-pandemic GDP level. So what the author is saying, that if you want to achieve that level, the current year is the best likely recovery year. Okay. So aggregate saving investment rates contracted. The stock market is however booming, dancing to short-term foreign capital inflows with the little connection with the real economy, giving it distressed state. The asset monetization effort appears nothing short of fire sale. What does it mean? It's very simple thing, that right now why economy is growing with the short-term inflow of foreign capital in Indian stock market. It is not on the basis of real production in the economy. Production is not very high. So the money is flowing in, that is temporarily. That is what author is saying. Now what are the other solutions? So it seems unwise to anchor accurately needed investment, a revival strategy for discredited PPP model, or on fickle FIIs investor or investment in the stock market. Instead of asset monetization, why not monetize debt, which is very high, with committed borrowing from the market and the central bank? So this is the question the author is asking. Why not you are doing this kind of solution? Why not you monetize your debt, which is more vital, because debt will be outstanding and it will go for ages. So you can see that the system with the financial system flush with liquidity, with no takers for the bank credit, why not finance the proposed investment envisaged in the budget by government borrowing? So why not you use the government borrowing? Okay, this is what it is saying. Okay. Now if you see, he has given another example. RBI's annual report shows this. So this is the data. Again, if you're writing exam next year, hardly it is possible that you will remember the data. Now how will you remember the data? If the data will sustain till next year, then only you write in the notes. Otherwise, do not write. So the inflation measure, the CPI, WPI, they are giving. If it is, you can say, temporary in nature, do not write in the notes. Just read it and forget. Okay. Like on the same line, chances of crowding out private investment are remote with the liquidity overhang in the market. Inflation risk is also limited with the little aggregate demand pressure. So, you know that in the last 2 months, inflation has gone up, but that is temporarily. RBI also said, right now they are having accommodative stance as well. So, simply you can say the rising public debt to GDP ratio is often red flagged. Because if the public debt to GDP will go up, like if you remember N.K. Singh committee report, that is review of FRBM Act 2003. What he said, that it's not just fiscal deficit. What it is public debt as well, state and center. So 40% for center and 20% for state. He has given the target. So here the raising public debt to GDP ratio is often red flagged. It means it's a signal. Okay. Another solution is potential risk to rating downgrade by bond rating agency if the debt is productively used to expand the GDP. So again, the thing is, money is here for the government, but what is the use of that? If they do not use that money for the productive purpose, they'll be in trouble. Like debt will be high, all-time high. So let's see last page of this, last column, I guess. So moreover, rising external debt by fickle portfolio investors perhaps carries a greater risk to external instability. Now, external instability creates a lot of problem domestically in our control, but external situations are not in our control. So foreign portfolio investment has skyrocketed by this much in 2020-21 over previous year to 38 billion as per the RBI data. So you can see in answer writing also, you can just give a small data that will help you to substantiate your point. These are kind of evidence. So perhaps poses a greater financial hazard than a potential rise in the debt monetization in the domestic currency used for productive purpose. Again, the same thing, that it's borrowing is not bad, but why you are using. You're using for consumption or maybe investment. So this is not for productive purpose. Now in perspective, like how to conclude it, this is also vital. So remember, so to sum up, NMP is an ambitious retail sale or lease of revenue yielding public capital projects with the potential threat of allegation of corruption and cronyism derailing the process. So author is worried about that what will happen in the implementation. The scheme is good, but it's all about implementation. So to revive the investment demand, to halt the economic decline, the main instrument proposed implementing NMP are public-private partnership and the stock market-based investment trust, that is INVIT. Both have serious shortcomings as experienced demonstrators. So that was the experience of the author in the past. Okay, so you can see the last paragraph, how to conclude it. So we have done, so both have serious shortcomings. So NMP document seems silent on how to overcome the past mistakes. They haven't mentioned, that is written by author. So MNP appears like a fire sale, which may not help realize the best social value for public assets to kickstart investment demand. Now, as I said in the last video where I was discussing the answer writing practice with all of you, I was saying that it is important that Indian economy should be investment driven, not the consumption driven. Right now it is consumption driven. That's why this scheme government is trying to bring. Now, if reviving investment demand quickly is the real goal, debt monetization seems a better option because debt will decline, and then the asset monetization, because if debt monetization will be there, funds will come and then you can use and debt will be reduced. So the simple thing is that wholesale businesses with lower operating and transaction cost at a currently negative interest rate with excess liquidity in the financial market, you can see that RBI is not increasing the interest rate. It means there's an excess liquidity. They're having accommodative stance. Then low aggregate demand, inflationary threat seems minimal. So such targeted borrowings, if quickly funneled into infrastructure investment progress, could crowd in or bring in the private investment, igniting a virtuous cycle investment-led economy revival. So this is the solution that he has provided. In the answer writing also, this is the demand of the examiner. So if you are able to fulfill that demand, you will get marks. I hope you understand how to read the article. In some other video, we will discuss how to pick those articles which are important for the examination purpose. So here, that's it for this video. I hope you like this video. Give a big thumbs up, share with your friends, and don't forget to subscribe Ecoholics. We'll see you soon. We have a separate answer writing mentorship session that is totally for free. You can register or take appointment. The numbers given in the description. You can visit our website and download our app for getting these directives, important points for answer writing. Thank you so much. Have a nice day.